All right, so I'd like us to just go through binary trading. And just like we normally discuss anything to do with financial markets, we go to do a disclaimer. And just mention that foreign exchange trading on margin carries a high level of risk and may not be suitable for all investors. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. I'm not giving any trading or investing advice. This is purely educational purpose. And more so when we come to binary trading, the risk and the result and the returns are kind of super exaggerated. So it's more risky than Forex, and it gives you more returns than Forex within a shorter time. So I think that for most of us, we understand. So I'd like just to mention a few things about options and probably where option trading began, okay? In fact, before I joined IAM, I was already looking at trading in options. But what I was looking at was trading the traditional options, okay? Which is a completely different ballgame than Forex, okay? Than even binary, what we are trying to discuss today. So, it's good maybe just to understand that the term, especially with regard to the terminologies that are used in options, and probably I think I should put my face on this thing, right? Let's see if I can do that. Okay. All right. So you can see me. If you can see me, type there 333, and if you prefer, okay. I think it's better when you see me. All right, so as I said that the basic definition of an option is almost derived from the word an option, meaning that in an option, the buyer of an option has options. They can decide to exercise their right to do what they wanted to do or not to do what they wanted to do. So basically, if you want to understand what an option is, take, for example, a company. For example, let's just give a simple example like, say, Safaricom. Maybe Safaricom would like to import some equipment that are used in the transmission of, in their work in the industry. So they would approach a bank and tell a bank, in maybe 6 months' time, I will need to pay maybe $20 million. But since Safaricom would not want to speculate on the foreign exchange market, in the sense that they would not want a scenario where the US dollar against Kenya shilling will be trading at, say, 120 or 150 in 6 months' time, they would take what is called an option. Okay, they have an option to do also what is called a forward price. Okay, but they can decide also to take what an option. Now, an option gives them a lot of advantages. All right. So what they would normally do is they would approach a bank and say, I would like to buy $20 million in 6 months from today. So give me, and I would like to buy those dollars at the current price. For example, today we are trading at 102.5. All right, so it will tell the bank, give me a price, or give me my cost of having to buy those dollars 6 months from today at 102.5. Since I do not want a situation where in 6 months' time the price will be at 120, so the bank would calculate and come up with what is called a premium. All right. So basically, an option is considered as an insurance premium that is paid by the buyer to the seller, who is now a bank, to guarantee the buyer, which is now Safaricom, the right to buy, and sometimes it could also be to sell an asset, which in this case is dollars, at an agreed future price, which is called a strike price, which we have said 1 or 2.5, for example. So that is basically the definition of what an option is. So you come up with things like a contract. So in that understanding, you are doing what is called a contract. So you will find that in the terminologies of foreign options, you will find us using things like a contract instead of buying a currency or buying whatever. Then the confusing part now is what you call a buy or a sell. So a call is what gives the buyer the right to buy the particular underlying asset. A put is giving the right to the buyer of the option the right to sell. Now you realize that in that definition, I mean in those terminologies, you are mixing buying, selling, and all that kind of thing. But at the end of the day, you don't need to know all those terminologies to be able to do binary options. But it's good just to understand what we mean by that. So a call gives the buyer of the option the right to buy the particular asset. And a put is giving the buyer the right to sell the underlying currency, the underlying asset, okay, at an agreed price. Now, we have what is called a strike price and the spot price. Now, the strike price is the agreed contract price that we are saying in the future, you will need to exchange that particular, to buy or sell that particular asset at that particular price. So that is the price that is agreed on the contract. Now, the spot price is the price at which the current asset, that particular asset, is selling for or buying at that moment. Now, since this particular contract is entered in today for an execution in 6 months, now between now and 6 months, the price of the asset could go up or down, okay? Now, when the price goes higher than the strike price and you have sold the right to buy or sell, then there is a situation where your contract is what is termed as in the money. So ITM means in the money. All right. So if you are profitable at any point in time, or your price is better than the current spot price, you are referred to as being in the money. Now, if your strike price is worse than the spot price or the current price, then you are out of the money. All right. Now, the expiry is the time at which you agreed that particular contract, that particular option will be exercised. Okay, so you also have, when you talk about expiry, there are different types of options. There is what is called the standard options, and then there are those which are referred to as an American option. An American option gives the buyer of the contract the right to exercise the buying or the selling before the expiry, anytime from now up to the expiry time. Okay, but in some of the options, you only exercise it at the expiry time. Now what determines the value of an option between the time it is entered into and the time it expires? That is between now and the time it expires. What determines its moneyness or its out of moneyness or its break even and so on is determined by things called the option Greeks. Okay, and I didn't want to make this thing so difficult. I just wanted to mention this so that when somebody meets you on the street and tells you what are options and things like that, at least you can maybe remember one of these things. Okay, you can remember there is something called option Greeks. Okay. All right, so if you are following me so far, maybe type in there 444. All right, so option Greeks, there are normally 5 of them. Okay, there is what is called the delta, the gamma, the vega, theta, and rho. Okay, they are all Greek alphabet letters. Okay, that's why it's called the option Greeks. Now, these are variables that are normally inbuilt in the calculation of an option price. So when a bank is trying to calculate your option price, it will determine what your option price is or the premium you need to pay to guarantee you that future price, that price in future. It uses these particular variables. So one of them, of course, as I mentioned, is the delta. The presentation hasn't moved to the option quick slide. Is that so? So what do I do if it has not moved to the option slide? Where is it now? Jerry?
Options terminologies.
Option terminologies.
Good.
Here.
Yeah.
So when I go here, you didn't go there. What about now?
No, we're not at slide. No, not yet.
Oh, okay. Maybe my screen is not behaving then. Okay, so you're not in the option Greeks yet?
No.
Let me stop the share and I repeat again the share. Okay. Thank you for telling me that. What about now?
Yes, we are there.
You are there now. Okay, then probably I might have to be getting in and out. All right. So option Greeks, there are 5 of them, and this is what the bank normally uses to determine the price. Okay. So you have the delta, the gamma, the vega, the theta. Okay. I don't want to explain all this, but I just want to mention so that you know that options are things that are actually being used in the industry to actually do pricing. Okay, so the delta is determined by the spot price and what your strike price is. Okay, and I've mentioned what the spot price is. It is the current price of the particular asset you're talking about. The strike price is the price that you would like to contract with the bank. All right. Then vega is determined by the volatility of that particular currency, okay? So if the currency is very volatile, it means that it can move up and down so rapidly, then it determines what your cost will be, all right? And then the time to maturity or the time to expiry, all right, is called the theta, and rho is the rate of interest, okay, of the asset that you're talking about, okay? Now, I am moving to option structures, okay? I don't know whether you are with me on this one. Option structures?
Yes, we are. Yes, we are.
Okay, so now option structures are determined by now when now Safaricom, for example, instead of Safaricom maybe paying a premium, there is a way they can structure the option until they come up with what is called zero option structure, in which case they will not even pay the bank any premium. They will just be able to secure their price range that they are looking for by doing what is called a price structure. Now, I don't want to go into this. I just wanted to mention to you that it's possible to do different structures in options, okay? So you have what is called covered calls, full call spreads and things like that. Actually, these were the things I was trading just before I came to IAM in May to do Forex, and now I'm back to options again, which is quite exciting, all right? But now you can structure these particular options until you come up with now what is called binary options. Now, this is where I wanted to introduce to us binary options, all right? So binary options is basically meaning that you determine your time frame and you are telling the broker or whoever it is that from now up to a specific time, if the price goes higher than where it is right now, you will, I earn. If it goes below, I lose the particular premium that I've paid. All right. So you pay a premium, or you pay whatever it is that you pay, and that's what is called the investment that actually holds your particular your particular contract. Okay. So now I want now to go straight into the meat of things, and I just want to say that why I got very much interested in this binary trading is when I actually saw results that have actually been, that can be, so you can say, documented, isn't it? And this is one of the trainers of I am, who trains live trading on binary. Okay, I don't know whether you're on this screen. If you're on this screen, just let me know.
Yes.
Okay. Yeah. So
Yeah.
this is Matthew. Matthew has been trading for 1.5 years and has been able to grow an account of about $500 to 1.2. I think the last time I saw it last week was $1.2 million. All right, which is quite impressive. Now that's what made me decide to look at this. Now, what are the advantages of trading in binary? First of all, stop loss is inbuilt, because whatever you risk into the market, that is what you will, the maximum you will ever lose. All right. It takes a very short time to achieve your day's goals. Okay, you can actually trade for 1 hour, achieve your daily goal, and do something else. All right. In fact, it's normally recommended actually that you trade only for 1 hour, stop and do something else. Trade for 1 hour, stop and do something else. All right. So most trades are done within an hour. Okay. You only need to predict up or down. All right. If you are with me, let's move to the next one. So the objective of what you need to do is to buy or sell when you can determine that the price will be lower or higher than the present price value for the predetermined future time. Okay? I don't know whether you are with me in that, especially that particular explanation. So this is just how markets move. Okay? They move up and down, move up and down. So if you can sell up here and you determine maybe your period to be just around this level here, you win. If you buy here and you determine your time to be around here, you win, and so on and so forth. Okay? So that is the objective of trading binary, to be able to predict the movement of the price from where it is lower or where it is higher, depending on how you are looking at it. Okay? So that's the objective. Now, how many wins do you need in order to achieve your 8%? If you are targeting to make 8% per session, all right? If you are trading with a 1%, it depends on the size of your account. If you trade with 1%, you need only 6 wins, all right? And you have achieved your 8% per session. If you trade with 2%, you only need 4 wins. 3%, 3 wins. 4%, 3 wins. 5%, you only need to win 2 of them, and you are done for the day. Okay. But you only need to know that if you make a loss, if you lose one of the trades, you need 2 wins thereafter to recover or to break, to neutralize the loss that you made. All right. So that's the only trick when it comes to this. Now, I just want to mention that, of course, if you are a member of I Am, there are enough sessions right now that you can follow the top trainers and you can trade with them and you can actually achieve your target every day. In fact, right now, I Am is adding more live sessions into the schedule. So they are not 12 now, they are more. In fact, I've realized that there is one of the trainers who normally trains almost every 2 hours is back on session. Every 2 hours is back on session. So that is also important. This is the schedule. These are some of the brokers that I've looked at. Fight Forex setup, you get 150 bonus if you use that code, which this code is given by Matthew Thayer, okay? IQ options, I find it also very practical, and it has a lot of tools. Binary.com is also one, and there are many more. Now, I don't know whether some of you would like to see, what I have been able to do in this it's actually since April, okay, from the beginning of April. All right, are you there? Type
Yes.
in 7777 if you'd like to see what I've been achieving. Of course, you're already seeing. Okay. On the 3rd of April, which was actually a weekend, these 2 days were a weekend, 3rd and 4th were a weekend. Was it a weekend? No, I think 4th and 5th were weekends or something like that. All right. So the first day I lost 2%, almost 2.3%. On April 4th, I had 3 sessions. All right. And cumulatively, even considering what I had lost the previous day, I actually did 15%, which was quite impressive, all right? But the 5th was a serious one. I lost 10%, which was almost what I had made on the 3rd session of April. But cumulatively, overall, I was still 5% higher. On 6th, I lost 1.3%. On 7th, this is what I did. Yesterday was 9th, so this was on Thursday, on Wednesday. All right. I did more than 8% actually that day. More than 8%. That's almost 9%. All right. But yesterday I had a mixture of results. I lost 11% one of the sessions, but recovered a bit of it before the end of the day. All right. And today I had traded, my first session that I traded today, I've only had 1 session today, and I made 2%. All right. So hopefully at 8 o'clock tonight, we can have maybe 30 minutes trading, live trading. And there, I think I'll show you also the setup that I'm using. And I think that will be great. So type in there 888. One person is waiting, sorry. I need to be reminded also to be checking this. There was somebody who was waiting to be admitted, sorry. I think Zoom nowadays make sure that one has to be admitted to come into Zoom, all right? So if you can open your account between now and then, or you just want to see me trade live, I think that will be fine. That will be the first time I'm trading live. It will be very interesting. So thank you very much, everyone. I think now you can unmute yourself and probably say something. I mean, if you have something to say or any comment, basically, I think I've gone through a bit of this.
I have a question.
Yes.
So first, thanks for taking us through this.
Yeah.
It's been very helpful in demystifying binary for some of us.
Okay.
So for these sessions that you've put here on your spreadsheet,
yes,
these are 1 hour sessions.
Binary sessions, by the way, are normally shorter than the FX sessions.
This is on Go Live.
This is on Go Live, yes.
Okay.
Yeah, but if you are a member of IAM, there are Zoom options that are not part of the Go Live. All right. So there are extra sessions that you can get on Zoom. There is the Zoom link that the Telegram link that they announced those particular sessions.
Okay, thanks.
Yeah, but those sessions will be increased by next week. They are adding. There's a lady coming on, very powerful lady, teaches very simple strategies, and she's a very good trainer.
And then with the binary accounts,
Yes.
I'm imagining that there'll also be demo.
Now, for Fight Forex, they only allow you to get a demo after you have a live account.